So a critical aspect of buying for a foreclosure auction is actually getting the funding, because once again, these are ones where you're not going to be able to actually close with a typical bank, because they have to often close in 30 or 60 days, and you most time don't have access to the property. So today I'm going to talk about it because a subscriber asked for a little bit more detail on the financing of a foreclosure auction. So let's get to it. If you have any questions, leave a comment below. And as always, guys, we are Two Guys Take on Real Estate. This is our Auction Masters channel. We appreciate you here. If this is at all helpful, make sure you hit that thumb up icon, because it tells everyone that this is great content. So thank you so much, and let's get right to it. Start off first, when you're going to a foreclosure auction, you need to understand the foreclosure process, because every state's a little different. I'm going to talk about specifically Massachusetts and Connecticut, where that's where we go. It's going to be very similar to other states, but not always the same. One of them, for instance, might be the deposit amount. So for instance, Connecticut typically is 10% of the appraisal. That's a judicial state. They'll often actually hire and get an appraisal, which you can find on their court website through just pull the docket number, you can run it, and then you can kind of pull a lot of information about that property and the foreclosure, which is invaluable, to be honest. And then Massachusetts, it's generally 5, 10, 15, 20, 25, generally multiples of $5,000, often mostly $5,000 or $10,000 are your deposit checks. So, but some states I've heard that you actually have to come up with the deposit of the full amount that you're going to bid. So that would be a whole nother process. And either you'd have to use a line of credit that you have, or maybe you have funds with a partnership, or maybe a hard money lender that gives you the funds ahead of time. I'm not sure. Maybe even just going to the foreclosure auction yourself and actually experiencing it and asking a bunch of questions would be a great way to get familiarized with how it's done in that state or that county. I'm going to be talking about specifically Massachusetts and Connecticut, because that's what we do. Just checking on a project. We typically use, and keep on ourselves deposit checks that we fund by our cash on hand and our lines of credit. Now in Massachusetts and Connecticut, typically after you sign the memorandum of sale winning an auction, you have to close in 30 days. We're not able to get typical financing, so what we have done in the past many times is use what's called a hard or private money. And so I want to talk a little bit more about that specifically, so that you understand how to go about it. Now these people you can generally find, talk to other realtors. I would talk to mortgage brokers, often have access to a lot of these private lenders. And you can also just go on, check Facebook Marketplace. A lot of them troll there looking for people looking to lend money or to borrow money because they're looking to lend it. And they're all going to have different terms. So typically you're going to find that these people are lending in 12-month increments. Maybe they do 6 months, maybe they do 12, maybe they'll even do 18, but the average I'd say is 12 months. So that means you have 12 months to have your exit strategy. Then you're going to have an interest rate. So they'll have, maybe 10 or 12 or whatever it might be percent. So that's basically if you borrowed $100,000 and you kept it for the whole term of the loans, or the full 12 months, let's just say, you'd be paying $12,000 in interest to them. On top of that, they might have an origination fee. Could be $1,500 to $3,000 I've seen. And these are basically cover maybe a drive-by appraisal, some lawyer fees, whatever other processing fees that they drum up. And that is all kind of included there. And then they might also charge on top of that points. So what is a point? A point, so say if they charge 1 point, that is basically 1% of the loan. So back to the $100,000 example, 1 point would be $1,000, 2 points, $2,000, so on. And now sometimes, and everyone's negotiable, they might have you pay the points and the origination fee at closing, and then they'll charge you monthly for the interest, or they might roll everything into at the end of the loan. It really depends, and honestly, often that's very negotiable. So some might be more amendable if you have a lot of experience. Maybe you also can negotiate something with giving extra collateral. Be careful of that. And if you're adding extra collateral, that might be you have another property that you owe very little on or own outright, and you're putting it as they're putting a lien on it. Basically, if there's any, if they have to foreclose on the other project, and then there's it's under basically we're able to recoup all their money, they could then go after your other asset. Be careful of that. That's not something I'd recommend. It's very I mean, it can be a great way to get stuff, but you just need to make sure you know what you're doing and that you're willing to risk that. Now, you might also be able to include in that rehab, or maybe a percentage of rehab. Maybe they'll also have you pay a deposit on the total thing. So these are all things and negotiable aspects of the loan with these lenders. Private lenders, typically are going to be people that, have extra cash in there. Maybe, their self-directed IRA, or they'll have it, or a line of credit that they're willing to leverage. And they, just an individual that looking to make a spread on, as opposed to putting it into a CD or something. Hard money lenders are generally more institutional, larger company players that basically are, maybe they have a line of credit with a bank and they're just, lending out a spread. And they kind of, generally have a larger, pool of buyers and larger access to capital that they're looking to leverage. So private lenders might be a cheaper option than hard money lenders for you, so just kind of keep that in mind. But shop around, figure out what people have and what you can get the best rate. So big thing in here is shop around for the best terms and the best rate that will fit your your project, whatever you're doing, buying at foreclosure auction. And then they're often going to need at least 2 weeks to close. Some will close sooner, some will close a little bit longer. Depends on how much they're doing for the, if they're spending a lot of time on the title search or anything else, and their lawyer, how long they take. But you really want to know what that timeline is, because once again, you're putting a deposit down on this foreclosure auction, and if you don't close, you could possibly forfeit that deposit. So you really want to make sure that whoever you're going to be borrowing from will be able to close in a timely fashion. Otherwise, you're risking 5 or 10, or who knows, if you're down in Connecticut, 80 grand plus. It really depends on what you're doing. So you really want to make sure you have that lined up in advance. But this is like a method that, like I said, we've used a lot in the past. We still use somewhat today. And we also do some hard money lending ourselves to people that we know. It is a great way to do these foreclosure auctions, and allows you to close on them and get the deals that we can get, like the one we got just the other day. It was a 2-family house. It was a fantastic deal, and I mean, we were buying it in prices that honestly were like maybe 4 years ago. So that was really a great win for us, and we're all excited about that next project coming up soon in 30 days-ish. And we will actually be leveraging private money for that one. And for us, that is going to be 9 and 1. So we have 9% with 1 point. If you have any questions about anything like that, or the person who requested this video, I hope this answered all the questions that you were wanted to know about financing a foreclosure auction. Now, once again, you could possibly try, using a traditional mortgage, but I tell you, it's highly risky, and then you're risking your deposit if you don't close on time. I would err on the side of caution and use more something like a private funding, if that's what you need funding for, or if that's what you need to do as opposed to your own money. Thank you so much for joining us, and I wish you guys the best, and I hope you guys win your first foreclosure, or your second or third, whatever one you're on. And I wish you all the best, and I'll see you guys on the next video.